Stock market volatility in China could have an impact on BC's housing market. Province reporter Sam Cooper has been following the story closely. Sam, what are your sources telling you?
Well, yeah, we're seeing another huge bout of volatility in the Chinese stock exchange. It happened last summer. They dropped about 40% after a huge bubble was formed. I don't know if we saw if we can judge if we saw big impacts in Vancouver real estate at that time. But the people that think that this could help Vancouver are saying as the Chinese currency drops, people in China are going to get nervous that the government is just taking the value of their assets down. They're going to want to go abroad with that money. And of course, since we basically know a lot of Chinese money is invested in Vancouver homes, they see that as bullish and more of that money coming to Vancouver now as a safety play.
Now, do all the experts agree with that theory?
No, typically we have Canadian bank economists do think that this will help Vancouver housing, but some of the US hedge fund managers that have been somewhat successfully betting against Canadian housing in the past year did predict another bout of volatility in China, and what they're saying is money is being destroyed in China, assets are falling. How could that really help benefit more money coming abroad to Vancouver and around the world? They're also saying that as volatility increases, sometimes people are borrowing against assets in China, like businesses, apartments, houses. So they may want to bring some money back to China to try to support those things because they've already borrowed in China, and they need to essentially hold up their bank holdings.
Okay. To stay on top of what's happening in China and in Vancouver's real estate market, you can follow Sam Cooper on Twitter at Scooper Cooper.